Loida Velasquez, Realtor.com first-time home buying expert and agent with Team BC at eXp Realty. Thinking about buying a home but confused as to what is involved in the financing part? In today's video, I will be sharing with you everything that you need to know from your credit score, the down payment, how much you can actually afford, and how to get pre-approved. So let's get started. Buying a home is likely the biggest investment that you'll ever make, so we want to make sure that you're comfortable every step of the way. So let's talk about the numbers. First, let's begin with your credit score. You would be surprised how many first-time buyers tell me that they think they need over 700 for a credit score in order to even qualify for a loan. The good news is that you don't. There are so many programs out there, and the great news is that generally speaking, a lot of these only require a minimum of 620 for your score. So your credit score is definitely important because lenders will take a look at that number to determine your interest rate and your mortgage payment. Have you taken a look at your credit report recently? There are so many different resources out there where you can download a report. That way you can see exactly what your activity has looked like. When you're in the process of getting approved for a loan, a lender will take a look and see if you have had any late payments, as well as see what kind of debt you have currently going on. It is important that you take a look at your report in case there are any errors that you might want to dispute. And if you do have any payments on credit cards or car loans, make sure that you're making those payments on time. If these lenders and bankers see that you're late, they're going to see that as a liability and it's going to affect you in your interest rate. This is not the time for you to go and get more credit cards or even worse, get a new car. If you do this, I can tell you your chances of getting a home are probably not going to happen. As I mentioned earlier, take a look at your credit report in case there are any errors in there. Because yes, ladies and gentlemen, the credit bureaus do make errors and mistakes, but if you don't catch them, you'll never know. So take a look, because if there are errors, you can dispute them and have them removed from your credit report. Realtor.com has a great article with more tips on how you can boost your credit score, so make sure to click on the link in the description box below. So I've touched on your credit report and your credit score, but what you're probably wondering is, Loida, what I really want to know is how much can I actually qualify for? Now, this is a great question and everyone's situation is completely different. I wish that I could tell you an exact figure for what your purchasing power will be, but at the end of the day, a lender is the perfect person that will be able to give you that figure. Some of the things that a lender takes into account when they're determining your purchasing power is that they will take a look at your income, your credit score. They will ask you if you have any type of money saved for a down payment. They'll also ask you if it's just going to be yourself getting qualified and approved, or if maybe a family member or a friend will be getting approved as well. There are some other factors that usually also affect your approval and your purchasing power, and those are whether or not you are a wage earner or if you are self-employed. So make sure to contact your lender because they will be able to give you the perfect scenario as to what you're actually going to be able to get approved for and afford. And that's ultimately what's going to help you get started to the path of home ownership. So how about the monthly mortgage payment and what will that look like? Just to give you an example, your mortgage payment will vary depending on your interest rate and your down payment. If you haven't done so already, make sure that you download the Realtor.com app, as it has a really awesome feature called the monthly cost calculator, which allows you to play around with different figures so that you can see exactly what your payment will look like depending on what down payment you put and your interest rate. So as you can see, I just opened the Realtor.com app. Once you open it, this will be your dashboard, and if you go to the bottom right corner under more, it will take you to all of the additional features. So now we're going to click on monthly cost calculator. So as you can see, there are so many different figures here that you can actually play around with and change. So we're going to change the home price. Let's say that the home price is $350,000. And let's say that you actually wanted to put down 3.5%. At 3.5% down payment for a $350,000 home with an interest rate of 3.5%, you're looking at a mortgage payment of $2,133. Now, let's say for the same home, you actually wanted to put down 20%. We're going to change that figure in this section. Now, the 20% is $70,000 for a down payment, but that brings down your monthly mortgage payment to $1,583. And there you have it. So go ahead and download this app. That way you can play around with all these figures and get a better sense of what your payments might be looking like. Now, before you get ahead of yourself and start searching for homes and calculating payments, please make sure to connect with a mortgage lender and get that entire process started. The lender will be able to tell you exactly how much you will need for a down payment, whether or not right now is the best time for you to start home shopping, or if you need to take a little bit more time to save up more money for a down payment. Which brings me to my next factor, and this is the biggest thing that usually motivates or discourages first-time buyers from actually pulling the trigger, and that is the down payment. The down payment is extremely important when it comes to purchasing a home, but there are so many different programs out there, and they all require different amounts of down payment once you get that ball rolling. So what are some of the programs? The very first one that is most popular amongst a lot of first-time buyers is the Federal Housing Administration Program, also known as FHA, which requires a minimum of 3.5% of the purchase price for the down payment. Other programs that are available for buyers out there are the conventional programs. A lot of them require 3%, 5%, 10%, 20% for down payment. So again, ultimately, it's best for you to talk to your lender because they'll be able to review your financial situation to see what makes the most sense for you. Now, when determining a down payment, you'll want to consider how much you want to put down just because this will affect your monthly mortgage payment. You saw the example that I gave a few minutes ago, so think of that number. What is that figure look like for you that you're comfortable paying monthly? That way you can kind of reverse engineer and figure out how much money you should have saved up for a down payment, or maybe if you need to save up a little more. Now, before I forget, let's also talk about the VA loan, and that is for veterans. The VA loan is a 100% finance loan and pretty much is only available for those that are currently in the service or have been in the service previously. So if you are an active member right now, thank you so much for your service, and make sure that you check out the VA loan because again, this requires you to put $0 down for a down payment. So make sure you talk to a lender to review all of the different options of what might be the best for you and your scenario. All right, so you know about your credit score, the down payment, how much you can afford, and let's say that right now you're ready to get the ball rolling. The process is fairly easy. Once you get connected with a lender, they will require quite a few documents from you. And these documents include your W-2s or 1099s, your tax returns for the past 2 years, some recent pay stubs and bank statements. And depending on your situation, whether you are self-employed or a wage earner, they might require a few additional documents. At the end of the day, they will be able to tell you exactly what they need. And usually, once you submit absolutely everything that they have requested, the turnaround time can be as fast as 48 hours. Along with all of those documents that I just mentioned that they will need from you, they will also be taking a look at your credit score. So again, if you're thinking about getting this process started, start now taking a look at your report to see if there's anything that could be waived as a red flag. So if you're a first-time buyer, let us be your go-to resource for all of your home buying needs. We'll be talking about more first-time home buying topics, just as finding the right agent, going and looking at homes, and so much more. So if you enjoyed this video, make sure that you give it a thumbs up, share it with someone else, and subscribe to this channel. And with that being said, I'm Loida, your Realtor.com expert, and I will see you on the next one.